rolling right along. Before we begin, again, the regulators require us to display our disclaimers. You're all familiar with the risks associated with trading. If you want to review the full details of the disclaimer, you can check it out at NFA Compliance Rule 2-29C subparagraph 1. And you can read all about it. All right. All right. So we past couple of days have been very robust, to say the least. All right. This previous cycle went in excess of 300 points, clearly pushing our what we call our super cycle. And again, whether or not this was all sparked because of the no bombing overseas over the weekend, or whatever the catalyst was, most everybody is saying it's related to the potential deal on the table. That deal needs to be a monster deal if it ever comes to fruition. But in any event, we don't trade those. We trade price action, and of course, price action. Let's just take a quick look at the broader picture for a moment, multi-time frame. Okay, and of course, this all began back when it retested the 7,300 area in this fairly wide consolidation range. And then when we get that spark, and then when we took out these highs around 76.50s, again, all these highs just kind of dominoes. Interestingly enough, again, I wrote a little blip there on how institutions buy stocks. Again, you can accept that viewpoint or not. Feel free to read that. But it is interesting. And one of the things that I've noted myself over the years, not so much on a day-to-day basis, but you'll see that some of the most monster rallies begin after some seismic event, negative event, whether it is a natural type of an event or manufactured type of event. But typically, the largest, most robust moves. And what happens is that because if it's more of a negative event, you have the panicans, right, that sell out, and once that supply has been absorbed, there is no more supply, and that's the reason simply why the markets after a seismic event, negative event, can rally very, very strong. There's frankly no more supply, so supply goes from weak hands, right, to strong hands, and typically the strong hands are the stronger institutions as well as market makers. So the most recent situation, as you all are familiar with, when you kind of look at that overall, you saw this decline in the AI space, right? Down, 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 right? Again, persistently negative narratives out there that effectively spooked a lot of people. Other institutional players too. It's not just all the institutions are strong, but what happens is many of these um, hedge fund types, they're very much leveraged in their positions, and again, leverage cuts both ways. So with that leverage, you can actually get very strong moves down clear out that inventory. And once that's all done, think about it. It's kind of like the analogy, visual analogy is like taking a beach ball and pressing it underneath the water. You can do so, and you can hold it under the water for just so long before what happens. When the pressure that you're applying is released, what happens to the beach ball, right? You know what happens visually. So that's kind of what happened. Yeah, it pops up again, right? So that's what happens kind of here. If you think about like this move down is kind of the beach ball effect, right? And then when the pressure is relieved, right, you got kind of this type of effect in price action. Okay. So, again, I'm just kind of just, describing, I like to describe price action in terms of visualizations other than kind of technical analysis stuff, right? I like to kind of formulate some sort of um, parallel kind of view, of what price action kind of happens. But again, anyways, this kind of created this FOMO effect yesterday. Obviously, in our room yesterday, and I posted it throughout the entire community. Again, if you're not watching the options market, you're really missing an important piece of the puzzle. Whether you trade options or not, all right, but you really need to be paying attention to the mechanics and things that are happening in the options market. Right. Yesterday, again, I posted it a number of times in our room where the call buying was just absolutely, you know, I mean, it was just unabating. And so, of course, you all know what happens when you know traders, customers, that is, are buying call options. The dealers, the market makers, they're selling them to you, and they're getting short, delta short. So what do they need to do? They need to go buy either other options, or they got to go buy, futures or stocks. So that kind of feeds. It's kind of a feedback loop, and it was one hell of a feedback loop, right? The amount of calls that were being bought yesterday, not just intraday DTE calls, but long dated calls as well. And again, that information I get from Spot Gamma. I call them the Gamma guys. All right. So, all types of options, Philly D ask, right? What specifically in the option market? SPX options, SPY ETFs, the QQQ options, the futures, okay, primarily index options. And of course, there's, individual stock options as well. All that kind of feeds into just that strong call buying activity. All right. And of course, being pushing up through all-time highs, again, that just everybody's, that FOMO effect, right? Again, think about all those people that, sold, what sold their inventories that they would have liked to have perhaps held on to, you know, and but they were kind of forced to sell. Well, now they're forced to buy them back to get back on board, right? To reestablish their positions. What's interesting though, here's something that I've noted over the years, and this is a phenomenon that it all time frames. So since we are all here primarily intraday, but it can happen on all time frames. So the thing is this, the structure is this. For prices to go higher, you like, here's what you're saying. Like, for instance, here, say take this area here, right? So you get buyers and buyers and buyers in this vicinity, right? Now, though this is a daily chart, it could be any time chart. So the structure is buyers, buyers, buyers. What do the buyers want the prices to do? Naturally, they want them to go higher. But if they're buying them, buying them, buying them, and it's not going higher anymore, okay, then at some point they're forced. to sell out. Once they've sold out, okay, then there's again the idea is there's no longer any real supply, right? Because the buy so forth. But the idea simply is there before prices can really rally up, the weak holders need to be flushed out. It's just a phenomenon and it happens day in and day out. So again, you can see again, it's the idea of that beach ball effect, right? You got to clear out the inventory, go from weak hands to strong hands, and then the market. And then who controls that? Yeah, the market makers. They control the movement of supply from one group to another. They're the ultimate insider, right? Okay, so anyways, that's just kind of the overall landscape of the past, several days as I've been reading it here. So the fact is, the matter is, we do have all new all-time highs, and let's kind of zoom over to our intraday charts here. We are into a new cycle, and of course, the cycle has already exceeded cycle targets, and we have continued extension. So from yesterday's back-to-back rallies, Monday and Tuesday, we still have a spillover into today's session here, cycle day two. Now, typically on a cycle day two, the general view is that we're looking for some what's called an MATD rhythm or market or morning after trend day. That does not mean it has to go lower, but there's typically some consolidation action that unfolds. Of course, that can be at higher levels, and typically, as you can see here, the spill has been higher overnight. Our line in the sand today is the 7760s. Why do they choose 7760s? Because that is the last low edge of that upper consolidation area on the profile. So that becomes the line in the sand. Staying above that is bullish, and reconsideration of positions if markets tend to move below that level. So for now, coming into today's action, we're still very much on the momentum train higher. Some levels have already getting fulfilled. The penetration levels on the cycle day two. We're into the D level. For those of you trading D level, you're right there at 7807. Our targets here were 7805. The next one for us is 7815. So we're working our way towards that level. And that's about it. That's the skinny on the mini as we begin our session. So we're just basically staying in alignment. Where would things change structurally? Probably at least the first blush would be if prices come back down to the prior high. Okay, so dynamically staying above that pivot there around the prior high, that should be of a key importance. That's somewhere in the neighborhood of 77 the 80s, right? But for now, let's just stay in alignment, see how the market plays out, and as we always do, again, that's our core premise here. It has been forever and a day, just staying in currently in alignment. All right, that's the skinny on the mini. Let's have a good session, everybody. Feel free to ask questions along the way. We're going to try to keep it nice and tight and nice and crisp. And let's see what Mr. Market has in store for us today. One level to pay perhaps some heed to is going to be the call wall level, and that is 7827. So mark that off on your calendar, on your price scale. 7827. That is the call wall, and that actually matches up with money box level 1, which is 7828. Right. So again, the call wall level, again, it was non-existent yesterday. but it may be a little bit more of importance today. Looking for price possibly to get some sellers coming into that area if they push up to that level. Again, looking more for a little bit more of a rotational day, but just because what I'm looking for doesn't mean it's going to unfold that way. But we would be anticipating a bit more rotational type trade action. All right. What you see here on the right hand side chart, this blue zone, these blue lines, that's the opening range that's under development right now. It's a 5-minute opening range, and that's taken off the 5-minute chart over here. So of course it's not in place yet. It's not secured. We'll wait after 9:35. Once we have the 9:35 numbers, okay, that the zone will lock into place, and that will be our opening reference. What I'll also add on here is the D-level money box zone. Okay, right there, we're at the D level. So for those of you trading D-level plays, that's going to be the first short play up into this area. Again, I typically like to let the market settle in, give us our first 5-minute read or so. First 5 minutes tends to be the time of the day where, again, all the overnight pent up, trades are executed, and everybody's trying to vie for, kind of positioning, right, for the day. Right. So the so far the 5-minute midpoint is at the 12s. We got about another minute to go before this locks into place. All right. All right. So the first 5 minutes are locked into place. Those become our reference points: 78.04, 78.12 at the mid, and basically the 19s to the upper side. So those are our key first levels. Again, directional momentum and lean still remains higher. Is the bid-ask ratio related to the call option buying? No. The bid-ask volume ratio right in the middle here, that's just strictly um, volume, just generic volume across the spectrum. It's not really associated. It's not associated at all with options. All right, so it's the price is just kind of hanging out within the 5-minute open range. So if you're looking for a reversal lower, okay, we want to see price then um, violate the 7804 opening low, stay below that, fail to recover above, and then look to shift. All right, the overall dynamic lower. Right now, we're just in the context of the opening range, so the market's just kind of bantering back and forth. All right, trying to decide what direction, all right, they want to move this. It could simply just be that MATD type rhythm today, backing and filling some consolidation. Right, so certainly expect a different rhythm than yesterday or the past 2 days. Okay, we do have an auto here that triggered off on an A4. That's an A4 short, as you can see. All right, that triggered off. That actually triggered right off the opening. Right, for the most part, everything is just as we're kind of anticipating this two-sided trade. Again, mark off that 7804 level as the initial reference. We get the PMI coming out for July, 9:45, and then there's a 10 o'clock print if you're looking for the economic report moves. So as you can tell, it's certainly a different rhythm than the past couple days on the opening, where the opening just gapped up and kind of they call it a gap and go. Not so much yet today. Right. So initial parameters are outlined. Just call it the fives, right? 20s. I like to just round out levels, make it easier to remember. 7805s, 20s. Our 15 target has been fulfilled, right, per the daily trade strategy. So all those levels that we had to the upside, okay, have been fulfilled. Here's the scenarios that I outlined on the daily trade strategy. So question is, David, in your analysis of ES, how much do you factor in the NQ and how do you manage divergence between the two? So I do factor, the NQ. Okay, I mean, I am monitoring it. It is over here. We can monitor it here as well, live. I don't typically trade the NQ. All right, myself. I know a lot people do. I simply, if to me, managing two positions that are highly correlated like that, number one is I don't know if there's a true benefit to it. Some people perhaps just like the rhythms of the NQ, versus. I mean, it's certainly higher volatility movement versus ES for the most part. So a lot of people kind of like that scalping type of action, but I do pay attention to it. I it's one metric basically for me. It's just like you can see here, ES right now, excuse me, NQ right now pushing higher, ES not pushing higher in tandem. All right, you know, I just use that as a broad metric. I don't go tick for tick, meaning that NQ's pushing higher, ES not pushing higher. Huh? Is that a negative divergence? You know, as a matter of fact, ES recently took off higher before the NQ, and then the NQ obviously plays catch up pretty quickly. But I do pay attention to it. I can't say that I don't, but I'm using it more for broader. If you Here's the thing: if you want the market to move strongly in a direction, you're going to want to have both of them moving in that same direction. If you got some, one's moving one way, the other one's not really participating, then don't anticipate that the market's going to move very strongly in that direction, whichever the contract that you're trading. It may move some, but again, kind of keep it in check in terms of the comparison. All right. Does that make sense, Festine? Pastor Keen? So yes, I'm always paying attention to that. I'm also paying attention to market internals, the sector rotation, what's driving the price action today. Also, given that it's a cycle day two after two strong trend days, what would you anticipate? Two strong trend days to the distances that they've gone on each day, right, tend to be outliers. Doesn't mean it can't happen, but tends to be outliers. And typically, I don't you don't typically see three strong monster days, simultaneously, unless there's, it certainly can happen, but in most cases you're going to see some consolidation, some pause. So the question is, okay, so what's happening in ES? Yep, we're kind of backing and filling here, right? Two-sided charter trade, which we anticipate. What's happening in the NQ? Pretty much the same thing. How do we know that? Well, at the moment, you can see that the profile on the NQ is more balanced, right? That delta-shaped profile. So that tells us that throughout here we do have kind of two-sided action. All right, though again we're up at the upper edge here. Maybe the S&P's more towards the middle, but for the most part, the distribution of trade is what balanced. Okay, so yes, do we have a balanced type two-way action in the NQ? Yes. Do we have that as well in the ES? Yes. So do I anticipate another rip-roaring rally like we've had the past couple days? No. Certainly could develop again, but at the moment, I'm looking for that two-sided trade, which then, you adjust you have your playbook of different trade setups. In the past couple days, it's been, one way only, trend up. So if you're trying to trade a rotational strategy on a trend day, you're not going to do so well, and vice versa. If we have a rotational day and you're still trading the past 2 days trend directional influence, you may struggle again on a rotational type day. So obviously you need to know, what type of day is unfolding. Select the trades according to the day type that's unfolding. You should have in your playbooks trades that are more favorable for rotational days, and then the expectation for you take profits and risks should be commensurate to that type day. And then of course you should have also plays that are more favorably executed on trend days, and then your expectations then adjust accordingly. I know these are all broader comments, but they are important to have already considered what type of trades are you going to select on the day the day type that's unfolding. All right, so price still within opening range. I don't see any. So go over the 5-minute chart here for a quick moment. Okay, so there's nothing. There's no close above or below the opening, so we're just simply in that opening area. And again, the market's going to need to decide whether they want to punch through to the downside or back to the upside, or maybe just stay around here. We'll see. So to fill the gap, price would need to come back down below the prior high. They're trying to push below that low, opening low here on ES right now. NQ not there yet, but ES is certainly trying. All right, we got an A10, excuse me, got an A10 here long on that dip. All right, so we got the A10 long here working. All right, got a couple scales out of that. We'll move our stop to even now. Again, as you can see, so here's the thing, right? We were talking about, Pastafine was asking about the NQ. So if you note, right, the ES pushed down below its opening range here, okay? And NQ just didn't really participate. Pulled back a little bit, but clearly not to the same degree. So kind of the expectation is, for ES to bounce back up. So again, we had an A10 over here, which is a long trade for us. All right, we got a couple scales out of it so far. So all right, we got three scales out of the A10. Again, I'm just going to move up the stop a little bit. So now we're fully protected. I don't think the market's going to run away, not today. So we'll just tighten up the stop a little bit. All right, and we'll play it that way. Kind of play it close to the vest today a little bit. All right, so that's all what we have running right now. We got the A10 stops in place. We're in good shape there. Cannot hurt us. Bulls would need to clear above the opening midpoint for further upside. So the initial dip is bought, and now let's see if they can give it a run back to the opening high. Not much of a dip. Anybody take that dip long? Okay, JP took it. Okay, good. All right, very very good. See, nothing changes for what we do on a daily basis, whether it's a range day, whether it day to day, regardless of what type of day type is unfolding. All right. Um, our plan's the same. Right. So the market may give us different looks day to day, but our plan simply remains the same. E-mini Sniper asked, do you leave the 5 minute opening range in your charts after the day is over? Well, I can. I don't really take it off. In most cases, what I tend to do is I kind of do a post-mortem in the evenings, how the day unfolded, what opportunities, was I able to get, what was my read, did I miss something in the read? So yes, I typically will leave, all the indies and stuff on there. If I want to clean it off, to get a little bit cleaner look to the chart for my post-mortem, yeah, I'll take it off. But typically I'll put it back on it before I close down, and then it's ready for the next day. One of the things that I suggest, I've also suggested for everybody over the years is only have what's on your chart that's effective for you to make a decision. If there's something on your chart that, maybe you purchased from a third party or something that maybe you've created yourself and it's not helping you make a decision at that time of the day, why leave that particular, indicator on your chart if it's not helping you? Clean it off, right? Put it on when it's helpful to you. Again, I have a number of different, indies on here, right? So, what I like to do is overlay on my charts simply because I don't have to keep looking at multiple charts. So I have the opening range here. I also have the D level money box. But let's do this. Let's just clean off the D level money box for a moment, right? And you'll see it, right? Clean that off. So that becomes a little bit cleaner, right? And then that's essentially kind of what you do. I know where I'm in the opening range zone. Okay. So, perhaps let's clean that off. Okay. So now, the picture's getting a little clearer. Maybe I don't need it on right now to make a decision. So that's kind of the idea is only have what's on your chart that is really helping you make a decision. Now, the opening range in today is kind of similar to right where the value high and low is today. So maybe I can substitute the opening range for the developing value high and low for the time being. Does that make sense, E-mini? All right. So that's how I view it for everybody. I mean, everybody's different. All right. Again, my recommendation, just use whatever is there that will help you make a decision. All right. We get scaled out of our A10. All right. So that was it actually turned out to be a nice scale out. Again, why did I move the stop that quickly? Again, it's the type of day type we're having, right? So if we had a little bit more expansive day, I may have opted to keep that stop, the last contract at break even entry, to give it some room for the market to, expand higher. But today we having a bit more rotational rhythm. Okay, so I opted to move my stop sooner, and as it turned out to be, at this point, at this stage, anyways, a decent decision. So the decisions that you make on how you're managing trades, again, a lot of that you should also have that in your plan, meaning that on a particular trend type day, this is how I'm going to attempt to manage my trades. Maybe hold them a bit longer, try to hold that runner. On a day such as today, where we're anticipating and it is unfolding as anticipated, a more rotational day. I'm in a trade. I'm going to tighten up that stop, perhaps a little bit sooner, tighter, lock in instead of letting that, again, kind of managing a range type day versus a day type trade, even though it's the same trade, like an A10 long, same trade, different day type, adjust the management accordingly. Things like that. Have you considered in your own trading? How are you managing trades on a range type day versus a trend type day? Right? If you haven't considered that, make a note for yourself. Note to self: review management techniques on range days versus trend days. Try to create some rules. Backtest some of the ideas. You don't want to get stuck in again trading the wrong type of day, and then ultimately it's kind of a damn, I mismanaged that, even though you may have done well on it. Steve Nine says that helps. Great. Yeah, I mean, a lot of times I'm just throwing out some ideas on how to approach. I mean, guys, I'm not going to teach everybody how to trade. You know, like I'm just going to give you a short analogy. Maybe it hits home. Um, so I play guitar, or I try to play guitar, but I play guitar for recreation, right? And so I know the mechanics. I know I've been playing for a little bit, and I'm not Jimi Hendrix or anything, you know, but what's interesting is I was watching a YouTube, one of the guys that I've learned from, and I was watching a lesson from him, and what he was discussing was not anything about how to play guitar. He was discussing the thought process of different concepts of implementing the playing of the guitar, right? So you can apply that to any musical instrument or any topic for that matter. I'm just using that as example here, right? So I'm listening to them, and I don't have my guitar in hand. I'm working on the daily trade strategy last evening, and I'm listening to him, and he's demonstrating, what he's doing. So what's registering in my head? I'm listening to them. I'm not playing, and I'm absorbing what he's saying. So when I go to play again, all right, I may bring up that particular lesson and kind of, go through it once again, but now with my guitar in hand. And so it's like what I'm discussing here. Like I'm not going to teach you how to manage a trade, but we're discussing the different types of management that you could employ on a trend day versus a range day. And as you can see, I kind of demonstrated it in this particular trade here, the thought process. So what I really like to get from, the people that I learn from beyond the core mechanics is the thought process. Because how do professional musicians, I'm not a professional musician, I'm a recreational musician. How do professionals think and apply? That's what I like. So hopefully I try to pass along things like that to our groups, our community, right? That can be beneficial in your own trading. All right. So we're staying in our opening range balancing area as anticipated on the MATD type rhythm. And again, kind of the idea of trying to identify the type of rhythm as early as we can. Not that we have bragging rights that we knew what was going to happen, because that's not true, but rather what type of trades am I looking for in this type of rhythmic environment? You may have done no trades today simply because you're better on a range expansion day. I don't think everybody is equally competent. I think in most cases, to be able to thrive on a trend day as well as a range day. I think everybody has their individual strengths. I prefer, personally, I prefer more rotational days. Um, Trend days, unless you catch that trend day really early, and you almost have to have a mindset. I think Manny spoke about this in one of his blueprints or his Substack recently. Um, you kind of have to have a mindset that kind of dovetails with I'm looking for trend days. But since trend days are not as abundant, particularly the two that we've had, I mean, those are outliers. You don't just not going to get those type of days, like that. And you'll get intraday moves that appear to be trend, but they're not really true trend. Past 2 days were true trend. So I find those type of days is, when you look back, it says, "Oh wow, just we should just easily just buy and hold, right?" But here's the rub: we're day traders. I think most day traders day trade, meaning that it's very rare that a day trader kind of, I call it DNA, right? Your tendency to rotate, bought some, scale out, looking to buy back, sell back in, etc., back and forth, right? Um, I think they find it very difficult to be able to, oh, I'm just going to go buy and hold. Oh, and I'm going to capture 200 points, right? I don't think that's the case. It could be, somebody that actually has done that, but I don't think that's the norm. Not for intraday traders. I think the intraday traders is just that. We're looking for rotation, right? The rhythms that go in, scale out, get risk free, rotate back in, all that stuff. I think a lot of intraday traders, they tend to miss the big days, or they get a piece of it, which is great, but then they look back and say, "Damn, I should have held." Well, in most cases, here's the thing: because of those type of days that we've had the past two are rare. They're not common events. So, um, so for myself, and I'll only speak for myself, but maybe it applies. I was talking to one of our members yesterday, and I was basically saying that I struggle on trend days, right? I struggle because though I may get a piece of it, in which I'm not dissatisfied in any way that I got a piece of it, but when I look back, it's like, yeah, I could have held. But here's the thing: in order to create some sort of a habit, a repetitive process, you need to experience that process. You need to experience that type of trade day. In other words, in this case, you need to experience multiple trend days in order to hone your trend day skills. Does that make sense to everybody? But if you don't have ample opportunities, i.e., multiple trend days back to back, you're less likely to be able to hone that skill and really define it and refine it. So when those trend days, like we've had the past 2 days, and those were monster trend days, you look back and say, you know, I didn't catch, I got a little piece of it, but man, I missed a lot. Well, don't get too hard on yourself with that because you haven't been able to hone your skills to be able to hold it on a trend day. Why? Because trend days like that are uncommon. So how do you, you think about it, you would like, you have certainly like to have got a larger piece of it, but when you really examine it, and that's kind of what I'm saying about postmortem, when I'm examining it, I'm saying I would have never gotten that anyways because I don't have that experience. Okay, it's not that I don't have experience. I don't have that experience where trend days like that happen often enough to hone my skill. So that's why, for me, anyways, and again, talking personally about my own experiences, and also given my history, my own personal history as a market maker for years, right? I am, buy, sell, buy, sell, buy, sell as a market maker, though I'm not doing that to that degree today, but I'm still in that, you know, rotational range type rhythm type trader, not a buy, hold. Oh, I'm going to buy the opening range. Great. And I'm going to hold it because the market's going to rip 200 handles, you know, right? That's just not happening. That's not reality. So it's, it's great in your dreams. I have my best trades in my dreams, right? But certainly not in reality. The reality is you're not going to get it. Could you hit it occasionally? More happenstance? Yeah, it would happen, but it's not, again, think about it. It's just not going to be a repeatable event because you're not practicing it often enough where It becomes so embedded in your decision process. Okay. So we do like to try to take a trade and work to hold a runner. I mean, that's always kind of, the idea. And occasionally we'll catch a good runner. But that's it. We're just catching a runner. And that's kind of what keeps us going here. We take a trade, get risk free, take a few take profits, and then see if we can get the runner out of it. But again, that runner is going to be what type of day type will we have? How am I managing that trade? So things to think about for yourself. There's no right or wrong. It's just kind of what kind of resonates with you. You know. Yeah. So John B says my process is not designed for days like the last 2 days. Exactly. Right. It's not designed. I don't think most everybody here that in our community has a process that is truly designed to catch days like yesterday and the day before. I don't think so. If somebody does, raise their hand. But my sense is most everybody has, that rotational type, you know, hey, I want to make my threes, fives, eights, whatever we, and catch a runner occasionally. That's typically in our world. Okay, catch a 5 pointer, catch a 10 pointer, maybe a you know, if it's really moving, maybe catch a 20 or 30 handle one. And like to us, that's like, wow, that's great. It's like winning the lottery. But for the most part, it's gonna be, I don't know, three, fives, eight, sixes, things like that, right? Yeah. So the days like, yeah, Libby's saying in our group over here, days like the past 2 days are outliers. Absolutely, right? 15% of the time, I don't focus on those. And when they happen, I look at it and say, well, yeah, somebody got it. But I also think somebody's on the wrong side, right? And how many people out there that you'll never see them, for those that post on ScrewTube and X, the losers because they were shorting all the way up yesterday, right? And then they got blown out. Never gonna see those. Always the winners. Oh, I had 5 prop accounts, the copied accounts, and I made $25,000. It's a copy account, 5,000 in each account. You're only gonna see the winners, you never see the ones that they post losers. Alright, so better to focus on the 85% of the days. Exactly. Mhm. Yeah, base hits, again, that's a good point Ron makes, right? Base hits, you can win a game by hitting singles. If you're consistent hitting singles, you're gonna win that game, theoretically, right? Right? You're gonna win that game using the baseball analogy. Manny loves baseball analogies, right? Manny's the master of the baseball analogies. But it really makes sense though. You're up at bat, you just want to connect with the ball, you know, have a good consistent swing, connect with the ball. If you do that consistently enough, you're going to get on base. Yeah, Libby says most guys just post the winners. Yeah. Hey, Freddie's with us. Hey, say hello to Freddie, everybody. Freddie's back with us. Good morning, Freddie. All right, Freddie's back with the group. Say hello to Freddie. Freddie says reminders not to short on days like the last two are very helpful. Yes. So I don't know if you were in the room yesterday, Freddie, at all, but I was saying that. How many times was I saying that yesterday? Right? Longs only. Actually, the past 2 days, longs only. No shorts. All right, the first almost the first hour was just really sitting within the opening range, area. So we definitely have our MATD that we opined in the morning on our briefing, what we'd be anticipating. So at some point, we will get. I do anticipate we will get some expansion uh, attempt. All right, perhaps to the downside. Again, I don't like to make any predictive type of commentaries. You all know that, but they do like to try to at least attempt to fill the gap. So if we get a move like that, all right. So here's the 5 minute chart. Right, use that. So if we get a move down to try to fill the gap, whether it's to the high or even deeper, you're going to be wanting to look at. Here's the closing volume profile. Okay, and so you get the high point of control there, right around the 70, 75-ish area. So keep that in mind. So if we get a kind of a move down here, all right. Remember, there was a monster amount of volume right in here at the end of the day. So if and again, there was a lot of buying, right? But the fact of the matter is, if the price comes down into this area, I'm not looking for it to crater. I mean, that would be very, very way of an outlier to have what happened over the past couple of days and then absolutely collapse. That would just, I mean, we're in another universe if that happens. What we typically will be seeing or be looking for is any of the dips to be bought, any of the dips to be bought. Okay. Again, doesn't necessarily have to be, break out to new highs above today's high, but we certainly will see any attempt to move lower get sucked up. All right. So I don't think we're going to have a major, collapse in any way. The markets just don't do that. I mean, they can, but the reality of it is they don't do that. Right. So you have to just, adjust. What's the attempt? Get below a level, look to buy that dip. Get below a level, look to buy the dip. Okay. Now, when you buy the dip and it bounces a bit, again, it may not just rally all the way to the high. You may just get a little bounce and you may just be able to get a piece of it, you know? So again, keep your expectations where they, where they need to be. Yeah. So Ram says, wouldn't surprise me if we make a quick move up and then move down. Same thing, move down, quick move back up. Again, just kind of that, expectation of a rotational move. Again, here's the thing: if you're prepared for various scenarios, you should not be surprised at anything. If you're unprepared, or if you're a perma bull or you're a perma bear, yeah, you're going to be surprised. That shouldn't have happened. But if you are prepared for various scenarios, hey, if this one happens, sure, I'd be looking for a move back down and then a bounce. All right, let me see if I can play that on a deep discount or a move back up. Let me see if I can play that on a premium spike. Yeah, the 3 day cycle. One thing about the 3 day cycle, the 3 day cycle is not magic. Even though I like to jokingly around and refer to it as voodoo, but it's really not. And it's a blueprint, it's an outline, it's a rhythmic, you know, pattern that just again continues to unfold. And so there are, like a day like today, which is a cycle two, typically is some sort of a consolidation day. But then there are other times where it continues to be a trend day. All right. That doesn't mean that the cycle is wrong. It just means the rhythms of the cycle, ebb and flow and adjust to it. But you use it as kind of an outline. This is the type of day. This is the expectation on a normal cycle day. And then as it's unfolding, is it unfolding, to the normal? But in the end of everything, what takes precedence is what is happening, regardless of the cycle day. All right. So my sense is probably we're going to get a move to try to push a little bit lower. Why? Well, we've gotten a number of attempts here, to move above, the opening range high area, and is just right now is just kind of stalled out, right? So possibly looking for a little bit of a probe lower. And again, if the NQ starts going that way, I think we'll have kind of a combination of both. All right, NQ starting to push down that way as well to kind of look to close the gap. Effectively, the gap is closed on the NQ anyways. If you're using the high, so it depends on what you describe as gap close. I usually, as long as price comes back into the range, as far as I'm concerned, the gap is closed. A true gap. Some people use the closing price. I don't have an argument with that, but I don't. All right, guys, I'll be back in just a couple of minutes. We're going to take a quick break. All right, back with you guys. Got some refreshments. All right, I don't have anything. Let's see. What do I have? I don't really have anything active here. All right, so right now prices below the opening low at 78.04. Trying to push. They're just trying to nibble, trying to find where there's going to be a good solid response. I think there's still quite a number of people waiting down like 80, 85s, all right, to reestablish or re-engage in longs. Uh, yeah, the options area right now, um, certainly a different look to it than we had yesterday. They're not buying that, they're not buying as heavily as they were yesterday, as aggressively. So pretty much kind of what you're seeing is what you're getting, kind of that backing and filling type action. All right. Again, looking for ES to go to perhaps gap fill here. All right. Right. ES is already heading that way. All right, so gap fill for me would be 77.86. What level is that? 86? That's the prior high. I use the I use the highs or the lows for a gap fill. Again, some people will use the closing price. To me, a gap is as long as it trades back within the prior range, there's no longer a gap. NQ officially closed its gap if you're looking for, that closing price. So, yeah, so for me, the true gap is when price opens at 100% above the prior day's range or below. That's a true gap for me. The gap close on that becomes trading back into the range. And for me, does not require to close the gap, the close of the day, if it's within the range of the prior day, not the high, let's say. It does not require that to be filled. It's semantics. It's just, there's not, not one better than the other. It's just how you want to define what a gap, is. So a true gap above the entire range of the day, and then a filling of that would be trading back into the high. So 86 here today, if it trades back into below that 86, then I would consider the gap closed. Um, Gaps are common. I mean, almost every day we have a gap, and most gaps are within the prior range, and they tend to get easily filled. So in a case where there's a gap that's in the range, the prior day's range, you could say that the gap there, to close the gap, you would select the close. That makes sense? Or the high or low of the closing bar of the day. I usually use a 5-minute bar. So the closing high or low of the 5-minute, if the gap is within the prior day's range. Again, it's semantics. There's not one's right versus the other. It's just how you want to, take a look at it. I use the 4 p.m. close. To me, everything has always been 9:30 to 4 p.m. Some people now you would use the 5 o'clock close. Some people still use the 4:15 close. Not sure it really matters. That's where there's so many arguments, you know, in trading. Not so much arguments, but back and forth. And everyone's position on various topics, as far as I'm concerned, they're correct. Whatever your position is on a particular topic, okay, and that's how you do it, okay, you're correct to how you want to do it. So the 3-day rolling pivots, like the 3 days, yeah, the 3-day, yeah, central pivot zone. I'm trying to think of that name. The 3-day central pivot zone that uses the 24-hour session. So that would include till 5 o'clock. Yeah, that encompasses the entire session. So basically, 1800 to I have it set for 1800 to 1759.59. So 6 o'clock, but everything closes at 5 anyways. Question is on Sunday night, if price gaps up, who is allowed to buy the inventory over the weekend when the markets are closed? If the markets are closed, no, there's no trading. I guess only Bitcoin, right? But not in the equity markets. There is no inventory. There's no trading. When prices when it opens up at 6 p.m. Eastern time, right, market's free to trade naturally. Um, most most mutual funds and ETFs do not trade Globex. There may be exceptions. I'm not sure, but I would say the 99.9% of all those institutional players do not trade Globex. Certainly hedge funds do. Right. Who dictates price if it gaps up? Um, the book is collected, so there's bids and offers that are placed in the book ahead of time, and the system determines where that opening price is going to be. What is DRD? What is that, Libby? What does that stand for? Or just drivers? Oh, drivers of price. Yeah, okay. That's what I thought. Yeah, no, that's what I thought you meant. uh, how much do I think it's changed over the 20 years? It has. I mean, there's still obviously, going to be this. There's going to be the ones that happen repeatedly. Usually just all the geopolitical stuff. I mean, I don't think that's really changed in any way. Maybe taken on different forms, but it has. I mean, I don't know to what degree. It's kind of hard to quantify. But the interesting, you know, the markets, uh, the market tools, let's call them, the market tools that traders use today, have obviously improved. But I think that, whether they're algorithmic or not, and so, but the basis of the decisions still come from humans, still come from humans, and so from that angle, really nothing has changed. Oops, what did I do there? All right, so gap is filled. Different humans, different seats. Yeah, same decisions though, right? All right, gap is filled. If you played the D level, all right, you got a gap fill on the D level. If you played D level, I don't think you hit. Yeah, you just had the D level entry. So gap is filled. That's what we were looking for. So if you're playing that side, we got the gap fill. Does everybody see it, particularly in the kit room? I know most everybody in the PTG room does. Do you see where things have shifted? Can everybody identify where things have shifted? So, um, E-mini Sniper was asking, do I leave my opening range charts up there? Okay, so we had already discussed that earlier. And you can see why I leave it up there. Okay, can anybody identify that? Let me just show you if you haven't, right? So the market here kind of going rotational back through, right, this range. Everybody sees that? And then, of course, the midpoint of the opening range here, okay, the midpoint of the opening range is a reference point. So we talk about the high, low, and the midpoint. So notice here where, the rotations down and then back up, and then a shortening of the rotation here, and we got a shortening of the rotation there, okay, and then we got a little bit of an expansive rotation down here versus the prior one, okay, and now look at this rotation up, so it's a lower one. Does everybody see that, guys in the pit room as well? I know everybody does in PTG, right? So you actually have a lower high, right? You have a lower low here, and you have your midpoint reference. So price could not rotate back up through the midpoint. So that's kind of when we use these as references, right? So you got a rotation down past the low, right? Rotation back up, only up to the high, but a decent rotation. The rotation back down only essentially to the opening low again. So the next rotation here, what would we anticipate? At least to come back up to the high, but it didn't. Yeah, this is the opening 5 minutes. So it didn't. It just kind of chopped around the middle. Okay. So again, information, evidence, right? Trying to get an assessment of what's happening. Still not really any trade here, just kind of observing the rotations. The next rotation here went below the prior rotation. So there's a little clue that maybe things are starting to heat up a little bit more, perhaps to the downside. Still not 100% at that point, but some evidence. I know it's easier to see after the fact, and that's why we're reviewing this. The next rotation up, again, now it creates a lower high, now only to the midpoint. Everybody should see that quite clearly now. All right, let me clear up the chart for a quick moment. So now what do we have on our signal? So now we have what we call a premium. That is a sell structure. Okay, and so since price rotated and only kind of stalled out at the midpoint, we had a premium. That allows us to look for a short structure now after kind of this rotational activity. All right. So now that kind of sets in motion here the potential for, and that again, as I was calling for, a gap fill, right? The rotation started showing more evidence to the downside. So it's not so much the actual volume that's taking place necessarily. What I look for is how deep do the rotations go, the swings, if you want to call them swings. How deep do they go? What's the nature of the swings? Right? So the deeper a swing to me suggests the strength of those creating that swing. So in other words, a swing down, who's dominant in that swing down? Sellers. Okay, then when the swing turns back higher, who's dominant in that swing? Buyers. How far did the sellers push it versus how far did the buyers push it? Does this make sense to everybody? This is a way of reading price action. I don't need to know exactly how much volume on each swings, although you could put that on there, and if that's part of your decision process. But just in terms of the magnitude of the rotations. So then we got a sellers come out again on this swing. What's the magnitude of the sellers there? Not as much as the prior one. Otherwise, that swing would have gone down at least back to the prior one. So so the magnitude of the sellers not as strong. But now on the next rotation, right, again with more information now after a period of time, we also recognize that the buyers didn't have much in the way of continued strength. They ended up finding a kind of a balancing spot between those swings. Okay. So there's not much to do there. We're in the middle of the 5 minute opening range. The next swing, though, who's dominant? The sellers once again. So now the sellers on this swing, now we don't know if they're the same sellers or not, but the sellers on that swing, now what's happened? Well, they were able to take out the low of the prior seller's swing. So again, kind of the edge, right, goes to the sellers at the moment on that swing. Now the clue really becomes is when we get the next swing up, the question is, well, what do the buyers do? Okay, what do the buyers do? Now we know what the sellers did. They were able to push below the prior level of selling. So kind of an edge there, as I mentioned. But now what happens to the buyers? What do? Well, they're only able to get it back up to the midpoint. Where would they get it up to prior? They got it up to this level up here. So the buyers are losing strength on their move up. So this is how I'm assessing how the distribution and trading is going on between the buyers and sellers. How far are they able to push? What's the magnitude of that swing? And as you can see here, the magnitude of the buyers much less than the magnitude of the prior push higher. And then of course they had some a little bit of consolidation there. So now the edge kind of went to the sellers because they were able to produce a lower low. Now with the buyers, a lower high, that changes now. Something's changing there, right? Before we had kind of somewhat of an equal balance, but here things are changed. That is a what I call a COC, change of character. Okay. Number one. Number two, everybody good to that point? So finally, we have this premium condition, right? And then now this move magnitude obviously took out, look at this, it took out all these swings. It somewhat matched that one, a little bit below. But now you can see the next magnitude, the sellers clearly have gained the control. And look at the buyer's response, kind of a lame response, right? Certainly not as strong as the previous ones. So this is where this all kind of changed character, right? CO, right? Change of character. That's kind of how I look at when price is in a range. I'm looking at, and in most cases, all swings. I'm looking at what's the magnitude of the sellers versus the magnitude of the buyers. How far are they able to move it collectively? So you can see this change unfolding where it was somewhat, neutral uh, till about 10:30, and then it changed at 10:30. And also our 89 EMA, so price starts trading below our proxy EMA. Our proxy EMA is the 89. So price starts trading below that proxy EMA, which again for us that sets the direction, influence, or the average price in this case lower. Okay. So then that kind of led me to looking at the bigger picture and saying, well, we are probably likely to get a gap fill. And there we have it. So that's kind of the structure of what unfolded. All right. Kind of a quick lesson, but this happens, unfolds again constantly in different ways. So it's always, being able to identify these type of swings, and if they're equal swings, that's telling us something. If the swings begin to change the magnitude, and some people will put volume on there. I mean, there's tools that you can put. Well, what's the volume of this swing? Down here to this low. What's the volume here versus the volume up here? On this swing. Is there more? Maybe there's 5,000 contracts here, and there's 1,500 contracts here on this swing. I'm just throwing out numbers, right? Well, what does that tell you? Well, the sellers are stronger, right? They sold 5,000 versus the buyers only bought 1,500. So again, you could clearly see from a volume perspective, you know, um, that the buyers were not able to, sustain the bid, even though they bounced, right? So things like that are ways of reading price action, right? And again, it's not about getting every entry. It's about assessing what is the lean, how has the lean changed, how can I identify a change of the lean, and then what tools can I use to validate that. And again, to me, this is how I was taught back, in the 80s, when I first got into the business. Reading price actions, the magnitude of the swings. All right. I mean, you don't need sophisticated tools. The most sophisticated tool that we should have and hone is our between our ears, is knowledge. That is the most sophisticated tool. It's not some fancy indicator, although they can help. That's not where the trade lies. The trade lies between your ears. So if if you have faulty circuitry in terms of us, reading the market's price action, the result is going to be, potentially faulty decisions. So hopefully that helps a little bit. And again, the tools that we have to help get us into a trade, the various signals, again, that's just a small portion of it. But if you see a signal and you don't understand the context of as it's unfolding, then it's really difficult to take any signal, regardless of how good it is, if you have difficulty, in the overall assessment. Yeah, I see that premium. Yes, the premium is a short, but I don't really understand why I'm taking that premium. So first you want to understand just price action. Some people put zigzags indicators on their chart, which can be helpful. I don't know if I have it on here. Do I have a zigzag on here? I don't have a zigzag on this one. Some people put zigzag um, lines. That can be helpful. Some people add zigzags with. Do I have a zigzag on this one? Yeah. Some people have zigzags. Oh, here it is. I have a zigzag. Let me just show you. There you go. Okay, there's your zigzag. Okay, and again, you can design the zigzag of what type of swings, but that can visually help you. And then you can really get into details here. I don't want to get into too much details in live trading, but you could put, let's see, display zigzag volume. Let's see what that gives us. All right, here we go. So all right, so here's your zigzag volume. All right, so let's take a quick look. All right. Again, this is the first time I'm doing this, so it's always live, never Memorex. All right, let's see what this shows. Right. So what's this swing? Okay, let's look at this swing down here. This swing is 14,000 contracts. Look at this swing up here. Right, the upside, 15,000 contracts. Okay, so pretty equal. Okay, what's this one here? 65,000 contracts from that high to low. What's this one? 10,000. There you go. All right, 6 to 1. You see the difference? See what's happening now? 75,000 contracts here, greater than the prior one. Look at this one, 33,000 contracts. So much less on the downs. I'm sorry, much less on the ups, where before they were fairly equal. So and again, you can create smaller swings even. I have some pretty wide swings here, but you get the idea of how you can um, use these type of volume figures, right? So I'm looking at larger downside volume after some balancing, equal volumes. Now the downside begins to accelerate more, all right? And now this final swing down here, anyways, is about 20,000 contracts. And now we have double that on this swing. So we have less now on this one after accelerating lower or higher to the downside, right? And now does this mean this is going to, rip higher? No, it doesn't. It just means now, these sellers here, right, probably just blew out. Because you can kind of tell they blew out. How do you tell they blew out? You see this move right here in price where it just kind of like vacuumed it down, just kind of pushed down real quick. Well, that's probably stops, right? Just boom down, just to flush them out, right? And then they come back. So that's kind of a way people can also view price action is via using zigzags like that. Again, which can be helpful. So we'll leave that on this particular chart. Are they pinpoint accurate, decision tools? No, they're assessment tools. Right? I'm assessing this action versus, what the previous action has been. Right, cool. Cool beans. All right, very good. Love the zigzags. How many of you do use zigzags in your own analysis? Yeah, I know Dan does. Yeah. Well, some of you may never have been shown, you know, the usefulness, right, of using zigzags. All part of the learning process. That's what we're here for, right? Yeah, you know what? Throw out a chart. What I like to do is if I see something new and interesting and I don't have any experience, what I just typically do is I'll create a chart, put something on it, and still go about my business with my own routine. But I do examine it and say, hey, is this something that somebody else uses, finds useful? Is this something that I can possibly also find useful? Right, check it out, examine it. All right, cool. All right, so now again, we're pretty much even got. I think we even got a full gap fill based upon closing prices, right? Yeah, it's interesting delta viewpoint in a different way, right? So now look at here. Again, I'm just noting these things. All right, I'm not making any trade decision directly from this information, but it allows me to answer a question that you may pose. What was the strength of this move versus the strength of this move? Remember, there's always should be a comparison, right? So for the moment, anyways, this move to the upside was 43,000 contracts total. This move to the downside, what does it say? 45, almost 46,000. Okay. So one could say we somewhat have an equal, kind of swing balance there. Again, that's not saying that should be more or less. It's just a bit of one little datum, right, to assess. And then ultimately what happens to this current swing versus the others. Obviously, this has greater, look at this. Okay, so now look what happened. Okay, this is real good. See how it just snapped down real quick? Those are stops. They just blew out stops. That's what I'm saying when you see these quick, fast moves, right? They blew out stops. Here you go. So that's kind of the live footprint of a stop run. They were probing for stops. And all the way down to where? Overnight low, 77.61. What's today's line in the sand, everyone? 77.60. Okay, so they've gone down to the line in the sand zone. Interesting to see it from a different perspective if you've never seen it this way. Yeah, so live action says he uses his delta on the Dom it helps, but focus is necessary. The Dom, it's really tough, I think, because looking at at deltas on the Dom, only because from the standpoint of, not that you can't do it, it's just that you have to process a level of information that you know is so rapid, okay, that it's really it's super difficult when you kind of look things in a little bit bigger format, such as a swing, magnitude of a swing versus you know micro on a Dom. Think about how much information your brain has to process. Very difficult to process Dom stuff. It's fine if you're scalping. I don't scalp like that, but you know, but I can see, like, boom, those are stops. Now look what happens. Whoop, market bounces right back. Live Action says, Dave, I remember visiting your room you had many years ago. We still have that same room, by the way, and you were on fire then. Can only imagine how far you've come after all these years. I think I've gotten better than I was back then. Certainly more experience now, right? Yeah, we still have our room. And all these tools and things that we have that we use, and the techniques that we use, and how I'm discussing this stuff, um, again, we continuously use this in this way. We have a number of different variations of the tools. But again, a tool is just a tool, right? I get inquiries all the time, about whether it's the tools or, you know, track records of past trades. Do you track every single trade you do in the room? I don't any longer. We did for many years. I don't any longer. I have like 15 years of tracking. I don't track anything anymore like that. One, I need a statistician, and I'm the statistician, and I've retired from that. I'm just more interested in teaching our concepts, you know, individual trade tracking. For me, anyways, personally, it it's great if I show you what we've done in the past, but what does that mean to you now? What does that mean to anybody? Right? You want to validate? I get 44 years of validation. I mean, my whole career. But people have to stick their finger in the hole. You know, but I like to teach the concepts of what we do and how we do things. That's where you're going to learn. That's where you're going to make progress. Even if you took the idea from me, when I posted, I'm looking for a gap fill. What time was that? Even if you took that away from it, that was at 10:36. So put your mouse at 10:36. Where was that? Price was at 7,800. Right? So I'm not telling you to short. I'm telling you what I'm looking for. I'm looking for a gap fill. I was at 70, what did I say? 7,800. So if you just said, hey, David's looking for a gap fill, shit, I'm going short. Now, again, I'm not telling you to go short. I cannot do that. I'm not your advisor. I can just state what I'm looking for, and then you take that information and use it how you wish. All right, so let me ask you a question, everyone. How many of you are currently running a Pitbull Traders evaluation, particularly those in the pit room? I know there's a number of us in PTG that are doing it. How about if everybody in the pit room has any? How many of you are running a Pitbull Traders evaluation? Raise your hands. If you are not, I do encourage you to do so. Okay. Renee, can you punch up the Pitbull Traders website URL? Pitbull Traders Funding is a funding firm where you take a test, take a test, and see if you can pass it. It's a trading test. Renee will punch that up in a moment. Once we get it up there, you'll be able to visit it. We'll get Renee to punch that up in the room here. There it is. Thank you, Renee. All right, so uh, live action and everybody, take a look at Pitbull Traders. Right, take a look at that link, bookmark that, and you can revisit it. But it's an opportunity for you to participate, kind of test yourself through an evaluation process. And if you pass the evaluation, that elevates you to a funded stage and using the folks over at Pitbull Traders, their monies to trade rather than your own. But you need to prove that you can pass, right? The go through the gauntlet. And again, this room here, the Pitbull room, right? Again, what we do here throughout the week is I'm a guest presenter today myself. And then throughout the week, we have guest presenters Manny, Bo, Tom, Rich, Danny, okay, at different time slots. So to help you all kind of analyze the markets, see how we view the markets from our perspective. All right, we don't give out trades. We're not about giving out trades. We're about educating the community on how to different views of analyzing the market and so forth in real time. And then what the idea is for you folks is take one of these evaluations. They're not expensive. They're really inexpensive when you think about it. And go join up, sign up for one. If you haven't signed up and you've been here for a while, right? Some of you have been with us for a number of weeks now, right? Again, what this does for us is it helps us keep bringing the product to you. Okay. So the folks over at Pitbull that are sponsoring this room, right, and this community, right, helps keep the lights on, helps keep bringing good quality, high quality, trading analysis and so forth to the group. So If you haven't signed up, really, I do encourage you to do so, right? And challenge yourself. Even though you may not think that, say, well, I trade my own money. I don't need to try to trade proprietary money or pass some eval, right? I've been trading my money for years. Well, that may be true, and hopefully you've been successful at it. But I'm sure in your own personal trading, you have holes, right? Oh, Renee, do the pit bull. I'm sorry. Thank you, Delphine. Uh, is that that's the link for the pit? Oh, that's the link for the pit. Okay. There it is. Thank you, Renee. Thank you, Delphine. So again, my point there is even if you've been trading your own monies, okay, I'm sure in your own analysis, in your own trade histories, there are some holes in it, some areas that you need some attention to become better at. Does everybody have holes in their strategies? They're not perfect strategies. You all have areas you want to improve. Well, even if you're trading your own monies, right? Sometimes that, you know, improvement process can be costly if you're trading your own monies. Well, this is where an evaluation can really shine, right? You can take an evaluation at a very minimal cost, right? And see if you can improve work in the areas that you need improvement on in a relatively safe environment. Yeah, I got a little bit of money on the table, but nowhere near what you're doing for yourself. All right. Yeah, we know what we know and not what we know what we know. So using an evaluation is really a kind of a kind of a low risk way of working on any of the areas that you want to improve upon. And don't we all have areas we need to improve upon? I think so. Right. Check out the website. All right. Renee posted that, I believe. Right. Footballtraders.com. And really consider it. Right. And again, like I said, joining up, taking an evaluation, again, helps the folks over at Pitbull Traders to continue to bring, high quality, uh, program to everybody. Right. Again, I don't get paid for any of this that I'm doing. Right. And all the presenters, we don't get paid for any of this. We're contributing to the process. Right. We're contributed to trader education. Yeah. Renee, could you post that link once again? Thank you. We're doing this for trader education. Right. We don't get compensated for this at all. And it's to the benefit of growing our community. And this is a way that you can kind of help us, right, continue to grow the community. Right. It helps pay the bills. Marlon needs to feed his dogs. Okay, so please consider it. All right. We don't ask. It's really hard for us to truly, honestly, it's really hard for us to ask. Um, but if you like what we're doing, that's the way to show us that you like what we're doing. All right. As we come into the fall, we're going to be bringing you some um, additional programming. All right, that I think is going to be very very beneficial. All right. I believe Danny is going to be joining us up. Danny with an I at noon. She had an appointment that hopefully she'll be complete with by noontime. All right. So, anyways, anybody have any questions? I'm going to be rolling out here soon. Anybody have any general questions, specific questions or otherwise? Yeah, I see that, Rom. So Rom asked, do you look at CCI divergence from 1058 to 1110? Does it guess it? I'm not a big divergence player on, on oscillators. Okay, I've just never. I don't really have a good divergent rule to follow. So yeah, I will say one thing about divergences is that first off, divergence is a fairly commonplace. So when it comes down to a divergence, which divergence is more significant than another? I find divergences are very commonplace. So I've never been able to find an edge with divergence. Though what you'll tend to find is the best reversals that do unfold tend to have a divergent component to them. But since they're so commonplace, how do you know which one's going to be the one? The one. Very difficult. So I kind of, what I've developed for myself over the years and how I analyze and trade and where I focus on. I focus on, I kind of stay in my lane. Yes, I've explored divergences. I've explored so many different things over the years. And again, I encourage everybody to do that. That's part of the journey. You know, if you've never, like we talk about zigzags today, if you've never experienced zigzags and something new to you, hey, let me experience it. Let me go check that out. Part of the learning process, part of the journey. You may find it to be the next gold mine for you. You also may find that it's meaningless, but unless you explore it, you will never know. You know. All right. If anybody would like to reach out to me for any reason, just jibber jabber about the market, about your own trading. Okay, I'll post my email. Everybody knows it in the pit in the PTG rooms, so I won't post it there. I'll just post it in the pit room. So if anybody ever wants to reach out to me and talk about their trading, see where they can improve, right? Perhaps what I can do or what the other contributors, right, can do to help you become better at what you do, right? Reach out to us, all right? There's no hard sell with what we do. Like I said, it's even difficult for me, asking about who's doing a pit bull evaluation, but we do want you to do them. And again, that's the way of saying to us, hey, I really like what you guys are doing. I'm going to take an evaluation. It's small potatoes, but it can be probably very huge, result for you at the end because you have access to, many different resources here to help increase and improve your own trading. One day's presentation for me, it's just a snapshot. For the evaluation, can we trade a European index? I believe so. I do believe so. Um, Delphine, I would certainly ask Marlin for sure. Um, I don't have that answer at the tip of my tongue, but I'm pretty sure we can. Yeah, but validate that with Marlin for sure. I don't think there's a, I think there's very few restrictions in terms of where products that we can trade. So that's why that led me to answer in the affirmative. So live action asks, and this is a good question. So in the evaluation, are you allowed to trade multiple different contracts simultaneously? You can. The only uh, issue that you're going to run into is what's called the hedge rule, the hedging rule. Okay. You cannot have a long and a short position, even if it's different contracts. You'll violate a rule. So yes, you can trade multiple different contracts. You can trade gold, right? You could trade, the minis, right? Micros, um, but you got to be very, very careful. If you're long one and short the other, and you're trying to hedge, it's gonna throw off an exception rule, and you're gonna bust your evaluation. Then you have to reset, and that's a pain in the ass. So as long as you follow the rules, you're good to go. But yes, you can trade multiple contracts. You're not restricted to just one. Any other questions that I can answer at the top of my tongue? All right, so hopefully you got some educational benefit out of this. And we did have a few trades. Again, my primary goal every day when I come in is to offer you some, viewpoint of how I look at the markets. If we have some, trades along the way, terrific, right? This has never been or laid out to be a trade calling service, right? But the idea is help you, see the market unfold in real time from our perspective. And if it matches what you're doing, terrific. If it's something, something new that you've learned, even better. So keep that in mind. This is what we're trying to accomplish here. All right. Does the DOM have helpful tools like a Delta? I think most of the DOMs have the Delta changes. Uh, Okay, I am going to end my portion of the stream here today. And again, thank you so much. All right. Oh, wait a minute. We got another question coming in or a comment. The alien. Oh, more of a comment. Okay. I make most of my decisions a la Livermore using volume to make directional move has to make sure directional move has conviction got rid of most indicators because they're too lagging. Yeah. So, whatever you use, so many different approaches that you can use to confirm a move. Yeah, yeah. If a move has conviction, certainly volume is right up there, no question. Right. I mean, here's the thing with volume in isolation, one particular move, like even taking a look at the, oops, wrong one. Even taking a look at the zigzag tool, right? In isolation, if you took any one of those numbers of the volume of that swing, it's meaningless. Why? Because it's just that volume of that swing. What does that mean? How can I compare volume, right, on one swing? I need to compare it, in a couple different ways, right? One, I need to compare it against the prior swing, right? And of course, I need to compare it against, right, the counter swing. So it's always a comparison, but individually, it's meaningless. But volume is very, yeah. I mean, that's kind of a standard approach. If a move is directional move, it has legs. Is there conviction to it? Well, volume needs to have conviction. You know, what time? 11:15. Yeah, there it is, right there. Okay, so this move here on that 11:15, like I said, this was a bit more of the stop run blowout. All right, and then you get kind of an automatic response back up there. All right, but clearly, again, just a quick review. This is where things changed right in here. All right, at about, what is it, 10:35, 10:36. Right, that's what things changed. Everything else in here was pretty even, and then that's what we look for, is that kind of a change, right, of character. That set in motion what followed. All right. All right, I'm going to end my stream here. Again, thank you very much for your participation questions. All right, hopefully it's been helpful. And again, just last thought. Again, do really consider taking an eval. All right. There's numerous benefits to it, and we're going to get into a lot more of that stuff as we enter September. All right. Again, stick around for Danny with an I. She's coming on at noon, and she'll guide you through some mindset exercises and things. And just as a preview, I don't want to give it away, but Danny's working on a program here, um, that you'll be able to join when she launches it. It's all about mindset. It's all about working your way through a prop program, a proprietary funding program, working your way through it, all the different obstacles, pitfalls, excitement, all the good stuff, all the rough stuff that you're going to encounter, and through a prop program. And it's not just for those in a prop program. If you're trading your own, it could be very, very beneficial as well. So uh, we're going to be working on giving you some more information on that throughout the month of August, and we'll be looking to uh, gather some what I refer to as IOIs. IOI stands for indication of interest. So as we start rolling out more information about Danny's program, we're going to be looking for anybody that is truly interested, where she then kicks off her program with an initial group, and she'll talk more about that in her segment. I just wanted to give a little sneak preview of things that are ongoing right now. The programs are being developed, and again, it's all going to be in alignment with helping you guys become better at what you guys do, and using the prop funding program as that pathway. All right, so I will give Renee a chance to get set up for Danny with the media streams. And again, thank you very much for your attention, and we'll see you. I'm around every day, but we'll see you next week at my scheduled Wednesday time. Have a good rest of your trading session.